Good morning, Jags. This is Fahad. Today is Monday, July 13. Let's get started. A quick look at the technical picture. The strength is very, very clean and obvious, and we are breaking out from a tight bull flag after 4 days of consolidation. And the S&P is now finally getting above that 3,200 level resistance, or trying to at least in pre-market. And I think if we hold here, and if we continue to show the strength for the rest of the day without any kind of fade, then I think that there is a good chance that it's going to clear that 3,200, which really opens up for a small gap fill that's up to 3,331. So basically about another 130 points to the upside on a pure technical basis, the S&P that is. So keep that in mind. Now, with that said, I want to discuss two stocks real quick. Both are reporting earnings this morning. The first one is AXNX, AXNX Modulation Technologies. A couple of days ago in a webinar, we recommended buying call options in this stock. So anybody who's positioned should do quite well in this after the earnings came out this morning. The stock is guided higher by about 4% in pre-market. And just to quickly point out here, on June 23rd is when we recommended buying October 40 calls for 550 or less. So those calls should run nicely this morning. A really impressive quarter, to say the least. And the overall performance of this company, which was also covered in the first read this morning, just shows the inherent strength of the company that we talked about. So in terms of its preliminary numbers, the company reported 15.2 million revenues versus street estimate of only 5.2 million. So this is a monster beat, more than 2 times or nearly 2 times what the street was expecting. The company also said that their sales to customers in the United States accounted for approximately 96% of total revenues. In terms of new order flows in the month of April, they saw very, very minimal disruptions due to COVID-19 restrictions on elective surgeries. And this goes to show that this company actually was never impacted by what was happening with shutdowns. And I think this mainly has to do with a lot of cases are handled with outpatient surgery, the ambulatory services and such, which had absolutely nothing to do with elective surgeries being put off. They also mentioned that the new order flow began a gradual recovery in May as restrictions on elective procedures performed in ambulatory surgery centers and hospital outpatient surgery departments were lifted in certain states. In June, the new order flow continued to improve as more states reopened. Average weekly new order flow in June was approximately $2 million per week, or 70% of the weekly average achieved in the first quarter of 2020 prior to COVID-related postponements that happened. They also said, more importantly, that over 485 unique accounts, hospitals and ambulatory service centers in the United States have implanted patients with the AXNX RSNM system since the product launched in November 2019, including more than 110 new accounts that were added in the second quarter of 2020. They also saw pretty significant strength coming out in Europe. Hospital customers, including in England, Netherlands, Germany, and Switzerland, that did for the most part provided the upside. The company also has a new wireless patient remote control system out called Smart MRI technology, and it was approved for 3T full body MRI scans recently. So this will provide a tailwind to growth as we move forward from here. So overall, the commentary that's coming out from the company this morning from this pre-announcement for the second quarter is quite positive. A very healthy, very strong beat of top line revenues of 15.2 million. So the stock is going to gap higher by about 4 to 5%, and I think this thing is going to continue to push higher beyond that as well. And we should see this thing gradually go to mid 40s or even higher. So if you're holding those October 40 calls, should continue to hold those, because I think we're going to see more gains to the upside. So this is a technical setup for a breakout as well. And if you look at the long-term weekly scale, you'll see that if it starts to clear this $40 clearly, it's gonna possibly take out this these highs post-IPO highs from last year as well, which was at 43.37. So that's AXNX. Another one, and we did not cover this one, but I'm now looking for a potential breakout in this one as well. And that's Perkin-Elmer, symbol PKI, Perkin-Elmer. Now, Perkin-Elmer is also providing a pre-announcement this morning, which is quite strong. This stock closed at 101.47, and in pre-market, this thing is gapping to 103. I think if we can grab this around this level at 103, 104, I think that would still be a good entry, because on a technical basis, I believe this thing is going to take out $105 per share and then gradually make its run to about 110. We have a nice bull cross in the last couple of days as well, and RSI has been rising, currently at 58. It's still plenty of room to run before it is completely overbought. So that's Perkin-Elmer PKI. The company is reporting this morning, or guiding this morning, that its second quarter growth is going to be, top line revenue growth is going to be about 12%. Organic growth is going to be about 12%. This is much, much better than what the street was expecting, of an 8% decline. So you can imagine the delta there between. The street was expecting the revenues to decline year over year 8%, and the companies end up going to post a 12% growth rather. And the company is mentioning in its press release that the strong revenue growth was driven by better than expected demand for Perkin-Elmer's full scale of solutions aimed at helping customers support COVID-19 testing needs across the globe. Most importantly, the demand for the company's RT-PCR and serology tests, RNA extraction systems and kits, and automated liquid handling instrumentation was particularly robust, all due to customers adopting its technology for COVID tests in their labs across the country. And as a result, this has contributed, just the COVID-19 business that the company has gained in the second quarter, just that piece alone has contributed to about $190 million in fresh new revenues for the company in the second quarter, which was never in anyone's street model. So that's where you get the surprise, where everybody was expecting that the total growth was going to be down, and yet the company is reporting that its growth was going to be up by 12% year over year. The full earnings report will come out on July 28th after market close, and I think this stock is going to run into that. Now, keep in mind, this is a life sciences company, PKI that is, so this is also potentially positive read-through for some other life sciences companies, the leader of which is, for example, Thermo Fisher, TMO, which has been gradually on a strong uptrend. So we'll see if we're going to get some sympathy positive upside as a result in this name. And then also there's going to be a few other names that I'm sure we're going to see some strength, relative strength, because of this update from PKI. And I'll cover those in the chat room as they come through. So those two stocks I'm watching closely. And then lastly, just a quick update on a very strong momentum name called Workhorse Group. Workhorse Group. Now, for those who do not know, this is a Canadian-based company that makes these tri-wheelers. I'm trying to basically Workhorse Group. I'm trying to find their website so I can actually show you what this company does. But here, if you go, this company makes the electric vehicles that look something like this. So these are basically just regular looking vans, but they are 100% electric. This stock is possibly going to run today, and most likely will continue to run for the next couple days. And it's been already a very, very hot stock, but it has recently pulled back from high of 22 to 15 currently. I bring this up because there's a very interesting note out from Roth Capital today, in which they are raising price target to $27 per share, which is a street high. It's not the price target or what the analyst is thinking about here that matters, but there's a related associated news, and that is the United States Post Office is going to announce sometime this week five finalists, one of five finalists essentially, that are competing for a $6 billion USPS contract to replace 140,000 legacy Grumman LLVs. So if you live in the US, you've often seen every day the post office guy comes out and driving this white truck, delivering mails in your mailbox and in your neighborhood. Well, the USPS is thinking about replacing all 140,000 of those vehicles with 100% electric vehicles. And Workhorse Group makes exactly the type of vehicle, electric vehicle, that they might be actually tapping on. So there are one of five analysts that are competing for the $6 billion order is going to be coming pretty soon, sometime this week. And if it goes to Workhorse Group, it could be a huge, huge order when you think about this. So you can see in pre-market, this stock is just ripping higher sharply from 1450 to 1715. But this order is so big that if it actually works, I could see this thing just continuing to run and get all the way into the mid 20s. So keep this in mind. A very interesting take. That's it from me, Chronicle.
Hey Fahad, no specific setups this morning, just providing some color to Analog Devices' acquisition of Maxim Integrated, which is now a done deal, subject to approval. The transaction is expected to close in the middle of next year, but honestly, if you've been following these two companies, you'll know that this has been rumored to happen for several years now, and it's finally happened. So this transaction is going to value the combined company at $68 billion or higher in a $21 billion all-stock deal. From a business perspective, it does kind of make sense as both companies have plenty of overlapping segments like electrification, optics, and 5G, automotive systems, as well as industrial automation. Though Maxim does have some exposure to the medical industry as well, and they do have slightly lower gross margins than Analog Devices. But overall, the end result will be a bigger competitor to Texas Instruments. Texas Instruments will still be by far the bigger company, but this will help put Analog on that sort of trajectory. So last year, Analog made about 6 billion in revenue, while Maxim made 2.3. Going by consensus estimates, their combined revenue is expected to come in at around 7.5 for this year, followed by 7.9 in the next. Credit Suisse was out with a note this morning modeling a target of roughly $10 billion in revenue, $8 in EPS, and $4 billion in free cash flow by 2025, and a target market cap of between 80 to 100 billion. So basically between, say, 25 to 50% return for the stock over the next 5 years. Personally, do I think Analog is a buy right now following this transaction? I don't, for a couple reasons. Don't get me wrong, I think this is a fantastic company, and I do like their broad 5G portfolio. But my first concern is that they do have a lot of exposure to the auto electrification industry, and while auto sales have been showing strength in recent months, most of that strength is coming from used sales rather than new. Second of all, as a general rule, the larger and more diversified a company gets, the harder it is to achieve fast growth. So while I don't doubt that Analog Devices stock will probably provide safe, positive returns over time, what's going to happen is that the beta is probably going to drop from here as the company gets bigger, which makes it harder for the stock to outperform both the sector and broader markets. So my thinking is, in terms of opportunity cost, why not allocate my capital to other semi companies that have more concentrated and perhaps less noisy portfolio, and as a result have much more room for growth. So putting all this together, good move for Analog, but I'm on the sidelines. And if you ask me whether I prefer to buy ADI or AMD for semi-sector exposure, I'd be more inclined to pick AMD every time.
Yeah, I agree. AMD remains one of my favorite for quite some time because of consistent market share gains over Intel and others. You mentioned being the auto exposure, and touched upon that point. When I saw that the transcript of this merger last night, and I was reading through it and the intentions behind it and everything. Anytime when I heard the word auto, the only thing that came to my mind was, if that's your play, then the best play for that is actually NXP Semiconductors, which could actually may get a sympathy boost this morning. And this is a name that we covered recently with some very strong bullish call flow. And I provided a detailed note behind this that if the auto cycle, particularly in China, continues to improve, NXPI would see the benefit, tailwind benefit of that. And this stock is setting up for a breakout through $120 per share. So that's the one that I would be watching from a trade standpoint. And you can see in the pre-market, NXPI closed at 117 yesterday, and it's already trading slightly above 120. So this is also a setup for a technical breakout. I think the story behind ADI and Maxim Integrated is now behind us. If you want to make a sympathy play for a breakout, I think NXPI would be the one to go, in my opinion. But great update over there. Agree with you with most of the thoughts, particularly about AMD. Jay?
Morning, Fahad. So this morning, I just want to give an overview of one of the names I discussed in yesterday's weekend research, which is Electronic Arts, EA.
Yep.
So, it's quite obvious we have been bullish on video games for quite some time. In Q2, we had Activision Blizzard, we had C Limited, which, we talked about again in their India growth. And then last week, I talked about Take-Two Interactive. And regarding EA, they do have earnings coming up on July 30th, but it's their pipeline and the catalyst that can come out of that pipeline that intrigue me the most. So if you take a look at their FIFA franchise, the next installment of that game will be launched on October 9th. JP Morgan they see Latin America as a big opportunity related to FIFA in terms of mobile games that they could come out with. Needham believes that EA is talking to FIFA about starting an esports league similar to Overwatch. And speaking of Overwatch, EA is going to be launching a game called Rocket Arena tomorrow. It's going to launch on PS4, Xbox One, PC. So we'll need to see how that game performs, see the type of financial performance it garners. You also have Star Wars Squadrons, which is a flight simulation game. BMO Capital thinks that there is a high demand for it. That's going to be coming out on October 2nd. And then the last part of the write-up that I talked about was the Sims franchise, which has been around for a long time, but when you look at what Needham talks about, BMO, Oppenheimer, it's essentially the hidden gem of the EA portfolio.
Yeah, interesting stuff. And so this seems to me from all the discussions there that there's a lot of catalysts set up for the quarter, for the October month, for the fourth quarter, essentially.
And
my only
catalysts that are not in estimates yet either.
Yeah, so this is the Electronic Arts bullish view that was part of the weekend research that Jay posted to clients yesterday, and it talks about a lot of these recent channel checks and a lot of these pipeline and catalysts that are coming up in October as well. All Jack clients should have it, so it's worth the read. Some really great information that was there. My only concern here would be, as you know, technicals, a bit overbought. Sure. RSI at 80, stock has run quite a bit. I prefer to buy things on pullback rather than light volume pullbacks rather than chasing them. So if we get one of those days when the market just basically turns off, it's clearly on my watch list to take a position. But I think even without it, one can still play diagonal spreads on this one just to not get blown away if there's a pullback and if one wants to position. And I will recommend whatever the trade is going to be in the chat room later today to all Jack clients how to position. Great stuff. Was that it? Electronic.
That
okay,
was it.
good. Avo?
Morning, everyone. Hard to gauge the start of the week, although if we continue this way, I guess it'll be another bullish one. Just on technical level, a couple of stocks well, first one I had already mentioned maybe 3 weeks ago or so, Clearwater, CLW. I don't have any new analyst content on this one, nor much in terms of options activity, but it appears to be that it's trying to gun itself for another, or set itself up for another attempt at a breakout. This one I would keep a watch on, pricing power and positive analyst commentary from the last time that I had brought it up on this one. Next one is, and I wish I had some or any analyst commentary or anything to back it up aside from seeing the chart and thinking this might be interesting, is Monroe on MNRO. It has, yeah, there we go. Good period of consolidation there. Started to break out on Friday. No news, nothing specific. I don't think they're, not sure when they report. Yeah, it's not for any time soon. So it's something worth keeping an eye on, especially if we do start seeing some options flow trickling in there. And third one, well, we've already talked about it a little bit. In mode, this might benefit from just a read through AXNX that you just discussed, Fahad, earlier, because pre-market this one's up a little bit, although on light volume. So
just sorry, go ahead.
Oh, I was just gonna say, if AXNX was had mentioned that outpatient or rather, you know, non-invasive or non-hospital numbers were not all that detrimental, then we may see some other companies having similar non-invasive surgical procedures numbers.
There's a slight difference, just to be clear.
Yes,
over there.
there is. Yeah, it's not the same.
In mode is very discretionary business, right?
That it is.
And you know, it's mainly used by guys that run plastic surgeon offices and clinics, and a lot of the coverage of the end markets that InModes cover, they're not covered by insurance companies. And as far as the AXNX is concerned, they benefited from the ambulatory service environment, which saw a pickup from COVID-19. So in fact, it became a beneficiary of that, and that's and from the outpatient. So very different kind of end markets. One is consumer discretionary in nature, and one is not. So just want to make sure that if you're trying to make a connection between the two. Also, going back to the Clearwater paper, this is a very nice technical setup for a breakout through 3750, and I just want to point out that on June 8th, the reason why the stock had such a huge performance on very heavy volume as it came up to this resistance and now sets up for another breakout is because the company guided its EBITDA for the second quarter of about $75 million versus prior guidance of $50 million. And so, and consensus was 51 million. So 75 versus 51 million consensus was a very big beat on EBITDA. And they mentioned that this is mainly driven by extreme tight controls on costs, as well as just overall largely very strong operational performance from the company. And so that's why this thing acted so strong at that point. So it's a nice technical view for a potential breakout. So I'll be keeping an eye on this one.
Yeah, and although it would be nice to see some perhaps some confirmatory options activity, it doesn't trade too much in the options in any case, so might not see any. I think I like it too. I like that setup, and I think it's attacking it.
Clearwater also said, according to management, I quote, "Through April and May, we continue to see strong tissue demand, with shipments up 30% versus 2019 averages. While order pace is starting to normalize in June, we anticipate that our production in second quarter will exceed expectations and match increased demand, which would drive an improvement in overall cost structure. In addition, our paperboard business is expected to remain stable in the second quarter, with strength in our core market segments offsetting recessionary impacts." So overall, pretty strong commentary on the outlook as well, April, May, and June. Good stuff, guys. I just want to quickly, one more thing that I want to highlight, that semis is going to definitely be the theme of the day because of the analog devices and Maxim integrated acquisition there. So you're going to see everything in semis run strong today. But it's not just that. There's just a ton of positive commentary that's out in the last couple of days. So I just want to quickly point out, according to Routers, the biggest Chinese semi company called SMIC is raising about $6.5 billion in IPO in Shanghai. And this has been a huge tailwind for this company called ACM Research recently. So that's positive for semis. Also, Digitimes is reporting that Taiwan Semi is going to be issuing very large bonds, so a couple $1 billion worth of bonds to fund a capacity expansion as well. NVIDIA is reporting that it's going to be out with a new chip called A100 GPU. And that's going to be selling to Google Cloud. So that increases prospects for more spending on the cloud CapEx side related to semis. Also, another article out from Synergy, and that company is talking about that hyperscalers, which is the three big public cloud companies, which is Microsoft, Amazon, and Google. They are talking about data center reaching 540 plus in the second quarter of 2020, which would be another record high. Last week, we also heard that Max Linear, which is another semi company, symbol MXL, they also raised their June quarter guidance, which was above expectations, and you saw the stock at a huge rebound. Also in webinar last week, we discussed that Apple is going to be using OLED screens for all of the new 5G iPhones that will be coming out sometime in September period. So we talked about that this is bullish for universal display, or symbol OLED. So when you put everything together, now we got this merger. There has been a lot of positive news around semis in the last couple of days. And so naturally we have a nice setup, and I expect far more upside in semis, and it's going to provide the leadership today. So a little longer than normal conversations this morning, but a lot of great content. That's it from us. We'll see you in the chat room shortly.